Hey, what's up everyone? Welcome into the channel. My name is Brett with Investing on the Go. Today we're starting a new series. Let me know down in the comment section below if this is something you guys would be interested in. But we're going to be covering the Fidelity option premium, SPY calls going forward, and we're going to be selling some other options as well. So if you guys are interested in this topic, definitely subscribe, tune in. But we're going to be going through the complete walkthrough premium collected on the S&P 500 SPY, the strike selection strategy, and the Fidelity order of execution with all of our premium and such that we've made this week. So this is just part of our continued fire journey, finding other ways to generate weekly income, bundle income. So if you guys are interested, definitely tune in, subscribe, and drop a comment down below. Okay, let's go ahead and get into it. Now, popping over into our covered call strategy basis. Now, earlier from last week on Friday, we were assigned 100 shares of SPY at a assigned price of $748. We took the assignment by Monday. It was all within our account. It cost us $74,800 as our cost basis. And we wanted going into this week to write a call option, which we discussed in our last week's video. So our mission kind of going into this week was to monitor the market, see if we can get an option out early enough in the Monday morning so that we would get, a good premium near that 748 strike going into the week, and just kind of monitor what would take place if we would break out above 750 or not. So our early week technical range on open on Monday, the S&P 500 opened up right around 747, 748, and we had kind of watched the market kind of drop off within this point. So early morning, as we did make a video earlier this week, we wrote a call option, collecting some premium right there. Throughout the day, it never returned back up to that point again. And later on throughout the week, we do see this is, up until Wednesday, the S&P 500 did break out to around 748. We set up an alert ourselves for a 750. If it was crossing over, it did begin to kind of cross over on Wednesday above 750, but quickly, deteriorated. So here are my lines kind of going into the early week. We hit 750 resistance with a low of 740, and then our mid price there was 744. So early in the week, we were able to set up our 748 call. So initially we sold our call option. We netted $460.34. And in that same day through Monday, because we were able to set up a call here in the morning and then watch it come down to that support of around 740, we were able to close that out early for $270. So we were able to lock in some gains right off the bat in a single day. Now, using the updated price range, right? We had a 750 high and a 740 low at the time. I went ahead and adjusted my strike price down a bit into the middle range right here. Now, I had accidentally made the mistake and quickly fixed it, but instead of selling a call, sell to open, I bought to open. So essentially I would be buying these shares at 744. If the price continued going over 744, I could buy them at 744. I quickly closed that out because I didn't mean to, but either way, it was able to be turned into a win. I kind of discussed this a bit earlier this week. So we paid $433 to buy, and we were able to get $444 when we closed out that transaction. So it was a win there. Now, after Monday, I just waited. Well, I did do a corrective, right? I corrected my call at 744. So I corrected near my 744 strike, and then I began to monitor for the week. Because 750 was the high, 740 was the low, the market was going into Google and Tesla earnings. And right now, all these mag companies are doing huge CapEx spending, and it did not disappoint. So these earnings did not disappoint. We're not going to go into the earnings themselves, but Google, Tesla, massive sell-off after Wednesday. So we were able to fix that call at 7:44 going into Friday, and just kind of monitored the theta decay and also earnings, which again didn't disappoint. So what happened after Wednesday? Well, Google, Tesla fell, dragging the S&P 500 on open. You can see we gapped down from 747 on Wednesday close all the way down to actually breaking below 740. We can see here on open, I believe we were down here in the 738, 739 range, and at a high on Thursday, we had a really difficult time breaking above that 740 area. So during this time, we were able to use this drop off in the S&P 500 to close out our 744 call option. So we only paid $56 to close out the call option that we had made earlier that week at 744. And once again, we adjusted our strike, our notifications a little bit lower. So we were now down in the 738 range. So we set up our notifications at 744, and we had another notification right around 735. And we just kind of, again, began to watch the market go. And we also initiated a new call option, lowering our 744 strike down just a bit into the week. So as we adjusted down lower, here's our late week technical range. Our resistance was now 744. Our bottom here on Thursday was 735. So we went ahead and kind of strike right in the middle. So we ended up doing a strike of 741. And going into now next week, we are looking at not only theta decay, but we have Meta, Microsoft, Apple, and Amazon all coming up on earnings on Wednesday and Thursday. So the big thing out there right now is CapEx, CapEx, CapEx. So that in itself dragged, I believe Google fell, 8% at the time. Tesla fell upwards of 15%. So we did adjust our strike price down to 741. This gives us with the premium that we collected, it does give us if the S&P 500 falls down to, I believe, 732, 734, somewhere within that range with the premium that we've collected along the way, we've essentially set up a bottom where even if SPY does happen to fall with the premium that we've collected, we're still net positive with our cash that we've been investing. So we have $589.32 from this call option. So that's a pretty nice penny right there for setting up going into next week. And again, we're just kind of monitoring theta decay. We'll take advantage of any swings down. So if the S&P 500 right now, I believe it closed at 738, 739 on Friday. If on open, something takes place over the weekend and the S&P 500 all of a sudden drops to 734, 732, we'll already have a limit in place that'll take advantage of, collecting premium on that drop. But let's go ahead and get into the next one here. If you guys are interested in getting between $75 and $475, you guys can sign up for SOFI. SoFi is offering a 3.10% APY. For those of you guys out there waiting for Robinhood Gold's 3.3% APY, SoFi is still a really good high yield savings account. And if you are looking for a set it and forget it style of investing platform, then SoFi Invest does really well. We made videos on this in the past where we just deposited $25. The reoccurring deposit, it would auto invest into VU. And just by investing $25 every week, we were able to go from, a account of $0 up to $1,000 within a 40-week range. So just by small contributions and these bonuses together really helped the account, move and get started in the accounting. So just an easy way. You guys can scan those to get started today. But there's your pitch in the middle. Next up, our weekly cash flow summary. So we realized our gains already earlier in the week, right? Our Monday, we realized some gains, and then Thursday we were able to realize. So between our initial Monday open and close, our accidental open and close, and then Thursday's closing, we were able to net $599.69 across 3 completed closed trade maneuvers from the 20th to the 23rd. And then going into now next Friday, right now we do have active credit of $589.32 that we've collected by selling that 741 strike for the 31st of July. And this we're kind of carrying through the weekend. We're carrying into next week. We're allowing the theta over the weekend. So right now, as of now, we've collected $1,189 from premium this week. Now, if we're able to close that call earlier because of some volatility going into Monday or so, it'll happen on its own. We already kind of set that up. But here is our completed weekly execution log. So we can kind of see from start to finish if you guys are interested in that. So here on the 20th on Monday, we did get those assigned 100 SPY shares at 748. There's our initial cost basis. On Monday, we did early morning, we were able to net $460.34. And then also with that swing down on Monday, we were able to collect nearly 50% of the premium. So we closed that out. We paid $270.66, but we were able to net $189.68 just in Monday's premium alone. And then we adjusted our strike lower from 748 to 744 to be in between that 750 resistance and 740 support. So we adjusted our strike down. I made the mistake and put a buy to open, so we corrected that. But we were able to net 1068 on that transaction. Then we actually corrected it with a sell to open here at 455.34. We waited till after the Google Tesla earnings, and that allowed CapEx to do its thing, scare the market, and drag the S&P 500 down. Thursday, we were able to rebuy back that call option for $56, netting $399.33 from that. So that was our 600 and some that we collected locked in. And then again, because of the 4 earnings coming up next week, I do believe with what's going on in the media and what's probably going to get posted with CapEx and kind of spook the market, I am adjusting my strike down to 741, and we were able to collect $589 on that strike. And going through the weekend, going into Monday, some of that theta will decay. So if we're able to, rattle the market early on with the Fed's coming out next week as well, and we have big earnings, we get some volatility early in the week, I could close that early and net some good premium and make some adjustments based on, what we see in the upcoming week. So, there's my execution takeaways, kind of chatted about that already. What swift order, air recovery. So that's our buy to open accidental thing. We were able to close that immediately for 1068 profit, and then adjusted our strike down to 744, and then closing that out on Thursday for $56. And then we're optimizing the CapEx potential earnings going into next week with a strike price of 741 to help if the market does, trend lower. That premium will help cushion some of the losses that are taking place from the positions that we currently own. And as we said, as we get closer to that July 31st expiration, scenario A, SPY ends below 741. That's awesome. I'll be able to keep 100% of the $589.32 cash credit, retain all my 100 shares, and I'll continue selling another covered call into August to continue generating weekly income. Or scenario B, I can, if SPY somehow breaks above 741, it's fine. I'll be able to collect my $74,100 from the shares being sold off at 741 plus my initial $1,189 in option premium for a total net profit of 489. We have quite a few resistances above us. With the S&P 500 right now trading at 739, we still have to break 740, 744. Then we have another hard wall at 748, 750. So we have quite a few, things above us that we've already collected premium up front for these on the way down. And, we have some premium kind of cushioning the downwards momentum going into next week. So that is the SPY strategy. Are you guys selling any covered calls or puts on anything within your guys' portfolio, either at Fidelity, Robinhood, Schwab? Let me know down in the comments section below. Let me know what you guys are selling options on, what your guys' strike prices are. And of course, if you guys did enjoy this content, definitely go down below, smash that subscribe, smash that thumbs up, and like and share this video. Again, if you guys enjoy this type of rundown on the option strategy, the wheel strategy of, we did sell put, we got a sign, but we took advantage of it, and selling some call options, then let me know down in the comments section below. We've posted quite a bit of these, little transactions during the week in the Discord server. So that's completely free right now. So definitely take advantage of joining in there and hanging out. And that's it from me, guys. I do appreciate everyone for tuning in and hanging out. And I'll catch you guys in the next one. Bye-bye.